What's up, traders? So welcome to this weekly recap video. So this video usually highlights trades that I've taken together with my team, whether the winning trades and as well as the losing trades. So in this particular video, I want to start with the USD and this is the 4-hour time higher time frame context that is from the 1-hour time frame. This is the M15 and before the entry, and this was after the entry. Now, this is not a setup that I shared to my community members simply because it was a high risk, trade, and I was not. It's not my wish to send, a trade that can put them in, in a bad position, or rather in a bad, what. In an awkward move, especially because most of them are either beginner or intermediate traders. So now it was a counter trend move. Counter trading is not bad. You just have to have the basic understanding of the market structure and how the market works before you take counter trends, because they can be really dangerous for you, or rather for your trading. Now in this particular setup, USD was overly bullish, so I was going short in a bullish market. It's acceptable, as I have mentioned, only when you understand the market structure. Now this was last week's swing from this point here. So from this point here, the market, you can see the market was making higher highs and higher lows. Now when we created this swing, I was looking for a retracement to the of this particular swing from this point here. So I was looking for a retracement. So basically, what I did at this particular point, I pulled my Fibonacci from this level to the from the lowest to the highest level, and there was a 50%. I was looking for the market to retrace at least until the 50% fib zone. So therefore means that I was looking to take a short from this level here until to the 50%. Then we can proceed with the bullish move. Now I'll go down to the 15 minutes and show you how I was able to get that particular setup in this market. Now as you can see here, once you get down to the lower time frame now, M15, you can have a good understanding of what the market is doing, or rather you can be able to see the structures forming well. Now this is internal break of structure. So if you've not watched my video on break of structure, or rather the market structure, I think you should visit that particular video, so that you can have an understanding of what I always look for when marking, or how to mark your break of structure and change of character. So basically here I'll highlight the market was making higher highs and higher lows, and of course it's shown with the break of structure that we are having each and every time the market is breaking the structure going up. Now at this particular point, I highlighted the last swing that caused the last break of structure. So it means that is now what we call the change of character. And once we add that particular change of character, what I usually do is basically pull my Fibonacci again. I use this tool from this level here to the lowest point for that particular swing that formed the change of character, because this now signifies that the market is ready to facilitate the pullback. And once we have that, now I will just place my pending order on the 50% Fibonacci level, and then put my put my stop loss above there. And then as well, my take profit in this particular case was it was not a 1:2, it was 1.5. So, and that is how my setup was. Yes, exactly like that. So I think here, so that was the setup, USD. So 1:5 risk reward ratio, perfect setup. This is on the entry point, and after the setup matured, this is how it looked like. And actually, funny enough, the market did not get to the 50% because this market was really bullish. So, and the price reversed thereof. So that's the reason why I'm always insisting that you need to understand the market structure before you jump into the counter trend moves. Now let's look at the second setup.
Have you heard all the Forex hype online? Flashy cars, false profits? Here, we are not about the hype. We are about the skill. Our training is real, practical, and beginner friendly. We will train you how to analyze the market, risk management, and also how to grow your account step by step. You can visit us at Spar Mall, 2nd floor, S47, or give us a call on our number, which is in all our social media platforms, to book your slot and start your journey to financial freedom.
Let's close this USD. Now the second setup was Euro JPY. So actually this was happening on now the USD JPY was on Monday, Now, Euro JPY was yesterday. Was it on Monday or Tuesday? I'm not quite sure, but it was a start of the week. Actually, the setup I think hit TP on Tuesday. Now, yesterday, which was on Thursday, I took Euro JPY. So let's jump on Euro JPY and see what I was looking at. So this is Euro JPY. So this is the setup that hit my stop loss. So Euro JPY hit my stop loss. Now from the higher time frame, I will not go to the higher time frame context. If you need to understand the higher time frame context for this Euro JPY pair, you need to visit the weekly market analysis. So let me just highlight what I was looking at yesterday. Now this was a very good level of supply. This was a very good level of supply from the 4-hour time frame context. Now once the market gets to this point, of course, I was looking at the market is making higher highs and higher lows on the M15, and this was the last This was the last swing that caused the break of structure, because the last break of structure is around here. So this is the last internal break of structure. The eye represents internal. So this was the last swing that caused the internal break of structure. And once we have that last high causing last swing causing the break of structure, once it's broken, that is what we call the change of character. By now you should have known that this is the internal change of character. And once we have a close below that, then it means I have my confirmation. So what I do next is pick the Fibonacci from this level high to this level low for that particular swing that caused the change of character. Then I'll take my position once the market retraces to the 50% stop loss above here, and then take profit of 1:2 or 1:3, depending on what the market is giving me. Now, this is the setup, beautiful confirmation and everything. Although I just realized that some brokers had that change of character closing below, while others actually did not have that particular confirmation. Confirmation breaking below. I'll not go deep into that, but so basically this was the setup before and the setup after. I think I did not capture it, but the stop loss, I ended up losing that particular trade. And yeah, so it's acceptable. Once you hit your stop loss, just accept and move on. Now that setup was Euro USD, and this is actually the setup. Let's just break down, just go straight into it. So this was Euro USD. So now for Euro USD, same context of the market. I think I'll not even go to a cleaner chart. I'll just use this one that I was highlighting. Now let me just for the purposes of this particular, for the viewers, let me just go to what let me just go to a new chart and show you what I was looking at from higher time frame context. So from the higher time frame context, this is what we had. So you see the market on the higher time frame context is on a very bearish trend. So we have the break of structure here. So the market was making lower highs and lower lows. I hope we are in agreement with that. Now once we have a break of structure, the market will always have a retracement. So in this particular case, I was looking at a retracement between on this one. So you pull your Fibonacci from the highest to the lowest. So mark if the market is on premium, then you'll be looking to short on these levels over here, and you'll be looking to buy. But now the market is in a bearish, so of course we are looking to short. So once the market got to this level, so from the 4-hour time frame, if we have good order blocks, maybe supply, I will go with the order blocks. But in this particular case, there was no really good order block on the 4-hour time frame context. So what we had on the daily is some imbalances. And the market will always feel the imbalances, or what we call the FVGs. So we had this FVG over here and another one over here. So I was looking if the market is able to get back to the that imbalance. Now we can remove the Fibonacci, and maybe we can mark the we can mark the 50% zone. With that blue line, we know that if the market gets above there, then it's okay to go short. Then we can remove the Fibonacci now and go to the 4-hour time frame, and eventually go to the entry time frame, which is M15. Now once the market is approaching my POI, what I'll look for is because if the market is approaching the POI, what we need to see is the market doing a change of character. That is important, guys. You cannot miss out on that one. So the market is doing a break of structure here, another break of structure. Look, there's somebody probably who would sell on this particular change of character, but you know what? The market here is below the 50% line, so it means that the market is not at premium. And of course, you always want to sell on premium and buy on discount. So you always want to sell above the 50% Fibonacci zone. So for me, I knew this one is just a fake out, just to traders who are impatient or who want some quick money. Now, once we had another break of structure here. So also you can see that from this swing was very high. Look, the market did this swing, pull back, did another swing, and now you can see even the retracements are getting smaller. It tells you that the bullish momentum is fading. So once I saw the bullish momentum was fading, so I mark, of course, the last high that caused the last swing that caused the break of the last break of structure, which is gonna be the change of character, right? So now this is the change of character, and of course, guys, once we have that change of character confirmed, I pick my Fibonacci from the swing high to the swing low to this move that caused that change of character. So my entry being on the 50%, stop loss just above, and then I'll target 1:2, 1:3. So in this case, I was targeting 1:3. Now the first setup, I was actually stopped out. I'll send you when I was making the re-entry. So this first setup was stopped out. As you can see, it is this first one that has an X that was stopped out. Now, but I managed to make a re-entry later on, because what I saw is that the market quickly wicked me out with this particular wick over here, as you can see. And then once the market wicked, it went down and closed below. So once we had that down closure, then I was like, okay, the market just did a sweep of liquidity on me. And actually, it was a sweep of liquidity because this was the Asian high. If you are very keen, you realize that this was the Asian high, but in this case, the Asian high had already been taken out, so that is why I did not give so much room on this particular stop loss. That story for another day. So that was the Asian high liquidity being grabbed on this particular week over here. So I made a re-entry after that that liquidity grab, and I ended up taking 1:3. I think the entry was around there. So yeah, so that was the setup, and I ended up getting a 1:3 risk reward ratio on the re-entry trade. So yeah, so another setup was GBP/USD. So GBP/USD actually was more of a similar setup to the what? More of a similar setup to the one on EURUSD, but I did not manage to take GBP/USD. Because those pairs are very closely correlated. So basically, this was the change of character over here. Let's just mark out this chart. The change of character here. So this was the swing that led to the change of character. Basically, this is a swing high and this is a swing low. And of course, my entry is always on the 50% of this swing that led to the change of character. Very simple. So my entry could be here, stop loss just above, around 20 pips here. That would be ideal. And then I will take 1:3 risk reward ratio. So that would be the setup if I did take GBP/USD. So actually, I argued against myself, like, okay, why didn't I take GBP/USD? I wouldn't have been stopped out, But of course, that's the nature of the market. Sometimes you'll get on this particular pair, goes against you, or even goes slow. Other times you'll get on another one and it goes faster, or rather, it's your stop loss, take profit. It's a game of chances, and that is the nature of trading. So I hope that you learned something or two on this particular video. So if you like this video, make sure to comment, like, make sure to subscribe if you're a new viewer. So see you on the next one. Bye bye.